Okay, okay, I think we're live. So here we are, our Monday weekly update on real estate, and joining us today is Molly Phelan from Siegel Tax. And Molly is a tax attorney. Is that right, Molly? Best way to.
That is the best way to describe me.
Okay.
In a professional light, yes.
Is that how your best friends describe you?
Absolutely not.
And so Molly, just explain a little bit when you say you're a tax attorney. Just tell us what that means, what you do.
Hi, my name is Molly Phelan, and I'm with the law firm of Siegel, Jennings. We are a national property tax law firm, and what we do is we represent property owners. I specifically represent property owners all throughout Illinois in finding their assessed values. Their assessed values is the basis for which your property taxes are determined. There are several factors that go into what calculates your property taxes, but I manage the one thing that we can control, which is the assessed value.
Okay, cool. All right, yeah, because Wes and I started talking about this last week, and one of the things that came up was we were trying to figure out. There's always this huge outcry with the triennial reassessment, but do they not change the assessed value every year, or how does that happen?
They don't change the assessed value every year in Cook County. They do in other counties, but in Cook County, when you get reassessed in year one of the 3-year cycle, unless there are extenuating circumstances, your assessed value should stay the same. So Chicago got reassessed the last time in 2018. So if you look at your historical tax bill, unless you had vacancy or added on to the building or something like that, your assessed value should have stayed the same for your tax bills that you paid in 19, 20, and then, no, 18, 19, and 20 were all the same tax years. So, of course, the bill that you paid this year, the bill that you paid last year, and the bill that you paid in 2019 all had the same assessed value. The reason why there was a difference is the tax rate and the equalization factor change every single year. And that's something that we can't predict. But you have to assume that your tax bill could go up or down depending on where your equalization factor and your tax rates land. I did create a spreadsheet if I could get control to look at that difference for you.
How do we do that?
Mary, do you know how to do that?
I do, but you host disabled participant screen sharing. So I think I need permission from you first before I do it.
Okay.
Yeah, that's.
Oh, wait a minute. Here we
what
go.
I meant.
Here we go. Make a co-host, right?
Sure. I think that's it. Now let me try this again. Perfect. There we are. Here's where we're going. Now, hopefully you are seeing a spreadsheet that has in column B tax year, column C final multiplier. Correct?
Yeah, we see that. Correct.
Okay. So if you see here in line, so Mary, have you shared, well, I'll let everybody know this. Mary shared a tax bill with me, and that's what I used for the basis of this. Now, let me backtrack, because everything I just said doesn't apply to last year, because what the Cook County assessor, and I'm sorry, this was an anomaly last year. So because of COVID, and in an effort to kind of stave off what had happened in the Great Recession, the assessor went across Cook County and gave an 11% reduction to all residential properties. That meaning all class 2 properties, which would be anything between a single family home, a condominium, and a 6-flat. Anything bigger than a 6-flat for residential properties did not receive this reduction. Now, my problem with his actions last year is that, as we know, the residential real estate market was 1,000 times hotter than anything that happened in investment properties in 2020. However, he gave an 11% reduction across the board. So it wasn't necessarily equitable for the overall tax base, because in my opinion, even though I'm always an advocate for lower taxes for everybody, I do feel that the residential segment was extremely undervalued compared to what the market values were last year. That is why you may have seen a difference between your 2020 tax bill here in the yellow and your 2019 tax bill here in the green. Because in 2018, this person's tax assessed value was also 34,407. The assessor came in and gave this a similar reduction to everybody. So that's step number one. But step number two is over here in the tax rate, where you see that there really wasn't much of a difference here in column F for the tax rate. Where you see the big difference here is in the multiplier. It skyrocketed from 2.916 to 3.2234.
Well, can you explain what the multiplier is?
Was that the equalization factor?
That's the equalization factor.
Okay.
Okay. Which you can see on your tax bill. Let me pull this up. So now, are you still seeing the tax bill screen?
We're seeing
Yes.
your spreadsheet. Yeah, we're seeing your spreadsheet.
The same spreadsheet.
The same spreadsheet. Okay, let me share the tax bill. Let me know when you see the tax bill.
Yeah,
We see it.
we got
Okay.
it.
So as you can see, the 2019 assessed value was this original 34,407. And you see that the assessor also indicates that the 2020 assessed value was the 29,934. They have your state equalization factor here at 3.2234. Now, the state equalization factor is a factor that the state calculates for Cook County because every other county in Illinois is assessed at 33 1/3% of its market value. In Cook County, as you can see for us, residential properties, that would be any property that is a class 2 is assessed at 10%. And this is getting a little bit insider baseball, so I'm sorry if I'm going off the rails on this, but if this was a commercial property, this assessment level would be 25%, which again would affect the assessed value. The state equalization factor, getting back to my original point, is a factor that the state comes up with. It's a sales ratio analysis. And that's why it varies each year, because the state looks at the past 3 years of sales, make a determination if the assessment base is actually 33 1/3% of what the overall sales market is. It is insider baseball. It is something that the state does. There's nothing that us as individual taxpayers can control on that issue. It is just the number that shows up on our tax bill, as well as the local tax rate, which is right here. Again, the local tax rate is determined by the municipality. So let's go up here. You can see this 6.935 is also represented here, 6.935, which is a combination of all of the individual things that you pay on your tax bill. Park districts, Board of Education. So you can see the Board of Education is 3.807% of your tax bill. So as we all probably knew, in Cook County, the majority of our taxes go to pay for education. And then you have other types of charges here. If this person had lived in a TIF district, that TIF line item would have also shown up on this tax bill. So let me go back to the spreadsheet. And now we're going to see how that plays out in the difference in taxes. So what we have here is, again, let's assume the tax rate in 2021 is going to stay the same. But this property I looked this up on Zillow. And so this property, according to Zillow, is worth $389,000. If it were to be assessed at 10% of its assessed value, and the state multiplier went to 3, which is basically a flat number for its efforts, and the tax rate stayed at 6.9%, the taxes would go up to $8,000. And that's really why, again, looking at line 3 and 4, which is the yellow and green line, that's why you, and it's even hard to explain here. Well, and it's because
that's really good to know, Molly, that it's not just us.
Yeah, well, this year, again, 2020, these tax bills that we have now are kind of an anomaly because everybody kind of assumed, well, hey, if my assessed value is going to go down, my taxes must be going down, right? And that didn't happen because the equalization factor went up so much. Now, the other thing is you also have to look at the world in which we live in. So 2020, obviously a lot of chaos, a lot of taxes in other realms weren't necessarily captured, you know, entertainment taxes, alcohol sales taxes, parking revenue, whatever. So some of that had to be placed on the real estate taxes. Understand that our life that we live in, it's an equation, and we have to pay for the budget that is predetermined before our taxes get paid. So the simple math is assessed value times equalization factor times tax rate equals the budget. And that's how, so we have the budget, then we have our assessed values, then we have our equalization factor, and then the municipalities have to determine what their tax rate's going to be to, again, equal what that budget number is going to be. So
and one more time, the how is assessed value determined?
Let's get into that. Okay. So your assessed value for residential properties is 10% of what your market value is.
Market value. Okay.
So if you're buying a home, then the easy way to calculate the taxes is take the most recent equalization factor, take the most recent tax rate, and then to create the assessed value, you multiply the purchase price by 10%. Okay, that's going to be your worst case scenario for your assessed value, because at the very least, the assessor can't go above that purchase price because that's what you paid for it. Okay. And
but you're saying that's the rule.
That's the rule.
They couldn't determine that it was worth more than that.
You have evidence of this specific property being this specific price.
Okay.
Okay. Now I'm talking about just single family homes. I'm not talking about rental properties or anything like that at this point.
Right.
Just for a single family property.
And before, if I could interrupt you on that too, how do they determine market value first?
So they do a sales ratio. So they do a mass appraisal system where they take their data from their different resources for residential properties and put it through their machine and come up with a mass appraisal for each different property segment in each different neighborhood. Okay. So for example, this one is a 211 property. So this isn't actually a single family home. This is at least a 2 flat, or it's in between a 2 flat and a 6 flat. If this was, and typically, even for those types of properties, if you have a purchase price of $400,000, your assessed value is going to be $40,000. Okay. If you purchased it in 18, 19, or 20, and so again, let's say you're purchasing a property for $400,000 and you get a notice of assessment of $60,000. That means that the assessor thinks your market value is $600,000. You have a purchase price of $400,000. You can take that to the assessor's office and say, listen, I just bought it for $400,000. This is the market value for it. 9 times out of 10, they're going to give it to you, if not at the assessor's office, at the board of review. If you have a different situation where you paid $60,000 for it and they have it at 40,000, okay, or you paid 600 and they have it at 400. There's also the uniformity test. And so even if you paid 600,000 and they have you assessed it for 400,000 and assessed value 40,000, what if everybody in your neighborhood's assessed at 30,000? And they're all very similar properties, you know, I mean, think of a typical Chicago street, you know, with the 2 flats, brick buildings, you know, and everybody else is at 30,000, but you're at 40,000, but you paid 600 for it. You actually can go file a uniformity appeal and say, look, here's 5 other buildings that I have in my neighborhood that are the same age, same type of construction, same size, and they're all assessed at 30,000. I want to be assessed at 30,000. They can say, oh, well, you bought it for 60, and you can say, yeah, but
Doesn't matter, right?
doesn't matter. Our law requires uniformity in taxation. You shouldn't get in. And there's case law out there that says you as a homeowner shouldn't get penalized just because you bought a property and everybody else in the neighborhood didn't.
Okay,
So
good to know.
don't feel like you're stuck with the purchase price. That being said, what we have seen in our analysis for 2021, we would often run into a situation where that was the case. Somebody would buy something for 600,000, it was assessed at 40, but a lot of other people in the neighborhood were assessed at 30. What we are seeing right now from the assessor's office in the data that he's put out for West Township and Jefferson Township, which are highly, highly residential areas, the assessed values have gone up 50 to 100% across the board because he's trying to catch up with the actual market values of those transactions.
Right.
What the previous administrations have done is they had really kind of given a discount to residential properties. Now, the other thing is if you buy it for 600,000, you're supposedly supposed to get a personal property discount too, which is in between 2 to 7%, depending on how generous the assessor or the board feels. I would say you as practitioners, you really want to have itemized things that are on your bill of sale list. And if you can, try to, you know, get good solid values on this. So any of the appliances, any of the carpets, grills, you know, other types of things, because technically what the tax appeal attorney can do is take those things off of the purchase price and get that purchase price knocked down because the tax is only supposed to be on the real estate, not on the personal property. Mm-hmm. And most people just aren't in the habit for real estate transactions to identify all the personal property that is happening in there. So that's a good practice point for attorneys to put that on because that will help their clients in their efforts to lower the property taxes.
Right. So, you know, there's been a lot of talk lately about Chicago and taxes and higher taxes driving people out and a lot of different things. I'm kind of curious. Well, first of all, one thing I noticed is that across the country for major cities and even not many cities that aren't as, you know, major as Chicago, that, you know, we have fairly low property values compared to most other major cities. But does that mean we are having to pay higher tax rates than a lot of other places around the country to make up for that because we still have a, you know, a budget that we have to meet?
That's not necessarily an unfair assessment, but I think the other aspect, you know, it depends on what you're looking at. Are you looking at the assessed values or the
Well, I guess the taxes that we pay in comparison to the value of the property, the actual that, you know.
So we're at anywhere between 1 3/4 to 2% of our market value. That's usually what I estimate for.
And that's been that way since I've been in real estate for 30 years. So yeah,
Yeah.
it's been, yeah.
but then commercial properties are up at 5%.
Okay.
So,
well, how does that compare to the rest of the country? Major metropolitan areas, I guess I should say.
I mean, if you look at who's investing in Chicago right now, if you want to look at it from a commercial standpoint, you know, we have a lot of investors that are coming in from the coasts who see the returns that our commercial properties get versus theirs. I mean, they're getting, you know, maybe 5 to 7% out there, where, you know, if you're a good investor and you're running a good property, you can get like 12 to 15% return on an investment property in Illinois, right?
Okay.
The problem that the reason why people don't want to invest in Illinois is because of this very issue, that there's so much confusion and misunderstanding of how the property taxes are assessed and where the property taxes are going to come in at after they're appealed. There's a lot of concern, especially for people who are going to be owner occupied and don't pass on those taxes to the tenant, right? Or if you're working on a gross lease. The biggest people who have to work on a gross lease obviously are the multifamily properties, right? You're not passing those taxes to the tenant. So if you get developed with, you know, a 5% cap rate, you're going to get crushed. And one of the things that the assessor, in my opinion, doesn't understand is he really went after, you know, 7 units and higher multifamily. But aren't we all talking about having affordability in Chicago? And we can't.
It's going to drive prices up, right? Yeah.
Exactly, because they think it's going to come out of the landlord's pocket. It's not. It's going to keep escalating property taxes. So there really has to be more of a concentration, in my opinion, of being able to keep, you know, apartment buildings at a much more reasonable value than what a 5 cap is lending to. Because yes, if you have a brand new shiny building, you know, just outside of the loop, and even those are getting crushed right now because nobody really wants to be downtown right now. It's frustrating if you're a multifamily investor at this point.
Is our system of paying taxes in arrears typical around the country, or is that not typical?
Not typical, but not atypical. Some communities do it, some don't. The benefit of how we do it is we're actually appealing our property taxes ahead of time, and then we pay it. Now, obviously, you can go on to the Illinois Property Tax Appeal Board after the tax bills come out, but many municipalities, for example, we have offices in Ohio and Pennsylvania, the taxes come out and you pay them, and then you have to go back and fight them to get a refund. So I'd say one of the benefits to living in Cook County and Illinois in general is that you have the opportunity to fight these things prior to having to pay them. Many municipalities don't have them, and many municipalities don't have the open system that we do, or many counties don't have the open system that we do to allow a residential taxpayer to actually fight their taxes.
Well, that's interesting. I mean, I could totally see that as being an advantage of paying in arrears, because it gives you time to figure all that ahead of time. But everything you've just said, though, makes me wonder, when we hear all of the hubbub about, you know, taxes in Chicago and Cook County and all of that, being a tax attorney who's seeing all of, you know, what's going on around the country, what do you think overall of like how, Illinois, Cook County, how, you know, of our system, our tax rate / tax system, and how it all works compared to the rest of the country?
Again, you're dealing with 50 different states with however many counties in each state, right? So, I mean, let's even talk about our microcosm within Illinois, okay? The appeal process and what the assessor and the board of review do in Cook County is very different than Lake County and DuPage County and all the other counties. You know, there's different nuances to each county and what they'll look at and what they won't. Again, for our purpose of doing residential is pretty straightforward in all of the counties. As long as you can provide what the market value is, and comparables if you don't have a recent sale, or if you think there are other properties that are lower assessed than you just because you purchased a property. It's pretty straightforward. I think the bigger question is, you know, are we being fairly taxed?
To investors? Okay.
I feel that residential has always been undertaxed, quite frankly, in terms of their assessed value. And I think that's one of the problems that we've had in terms of this equity debate throughout Cook County, because people on the north side get a million flyers to appeal their property taxes each time their triennial comes up. But if you go to some of the south and southwest communities, they're not being marketed. They don't have property tax representation down there. So even if the mass appraisal system tries to be on point, there will always be cases for, you know, filing a property tax appeal, or at least you should try, right? And there are a lot of communities that don't have access to filing property tax appeals. And I think that's been one of the biggest issues that we've had as a community. And what the media has kind of taken on to is that, well, the north side properties are assessed at, call it, you know, maybe 75% of their transaction value, where the south side properties, west side properties are assessed at 95%, right? And it's because those communities in some of those neighborhoods don't have access to filing, to getting these values down. They may not know the fact that if, you know, a house sold for $500,000, they could still get an assessed value of $30,000 because everybody else is $30,000.
There's uniformity, right?
There's a uniformity issue there. So, you know, when you look at it from a political conversation, the same inequities that prohibit us from having equal health care, equal education, you know, and then we have problems with the equal taxation, not because I don't believe that the system was created to be unfair. The problem is that there's not the education or resources to help people appeal their property taxes.
It just kind of ends up that way by default. Yeah.
It does. And again, think about it. It's a simple process, but on the other hand, you know, most people in all these communities have regular jobs, and to find time between everything else to figure out how to do this, walk it through the assessor, walk it through the board review. That's why people hire property tax attorneys, because they don't want to deal with it themselves, right? So
it sounds like you're saying that to you, if there was an issue with Illinois taxes or Cook County particularly, that it's an equitability issue and not necessarily that the system is all messed up or whatever, or that it's not up to date or doesn't work right, but that there may be an equitability issue.
When it comes to, you know, class 2 residential, I think class 2 residential, for the most part, at least in the, you know, has regularly been undervalued compared to what the market values are. Then you get into the conversation, well, you know, the Sears Tower trades for $2 billion and it's only valued at, you know, $500 million. That's not fair. Well, nobody understands the law there, and the media hasn't really decided to do a deep dive and ask a property attorney why it should be different. And the truth of the matter is, Illinois tax is based on fee simple. And it's very easy to understand what fee simple is when you're dealing with single family residential. For the most part, when a single family residential property transfers, it's a vacant property. You're just buying the real estate. You're not buying leases. You're not buying revenue from cell towers or anything else like that. It's a fee simple transaction. It's not burdened whatsoever or encumbered. But when you buy a leased property, it's encumbered. So not only are you're buying the fee simple, but it's fee simple encumbered. It's encumbered with leases. Those leases are intangibles that cannot be taxed under Illinois law because we have this uniformity. Every single property must be taxed as a fee simple property. Okay. So when you look at the Sears Tower and when it trades for $2 billion, Well, it's the Sears Tower. It has name recognition. It has FF&E. It has all of these leases from creditworthy tenants. So the risk there is not necessarily as high for an investor, which is why you're going to get a very elevated sales price. But the real estate, it's still bricks and sticks.
Mm-hmm.
It's only supposed to be taxed on the bricks and sticks. And that's really the
Still
thing.
in glass, as the case may be with Willis Tower.
Right, yeah, exactly. But that's really the nuance that the media hasn't picked up on, and the problem that Fritz Kagi has been having as assessor. They're taxing these properties, these commercial properties, as leased fee properties.
Mm.
And that's not what
So
Illinois law.
is it your opinion that that should be corrected, or that's just the way it is and people don't understand?
I'm of the opinion that it is the correct way to do it because it is the only way to have uniformity analysis. I'll use a different example. You've got two 12,000 square foot single tenant buildings right next to each other, okay? One is leased by Walgreens for 75 years, and the other one is owner occupied by a mom and pop tienda, okay? The investor comes in and pays $13 million for the real estate. They paid $9 million for that revenue stream because they have a 75-year lease from Walgreens. Should the tienda now have to have a market value of $13 million if they're identical properties? No, that's not fair to the tienda, but it's also not fair to the owner of the Walgreens building because their real estate isn't any more valuable than the tienda's is. They just have an additional value on it of $9 million because they have a 75-year lease with Walgreens.
Yeah, that's tough. I see what you're saying, but on the other hand, they bought that lease. They paid for that property because it does have that lease.
That's the error in thinking. That why it goes back to my original thing when I'm saying when you guys do a transaction, you've got to list that personal property.
Mm-hmm.
Personal property and tangible properties are all things that are not bricks and sticks of your real estate. And so
is there no taxation then though on if we only you know what I'm saying?
There's this organization called the IRS. I don't know if you've heard of them before, but they actually tax us for our revenue on our businesses. And that's what you're being taxed on. So really what would happen is if you tax them,
you'd be double taxed. Okay.
You'd be double taxed.
Okay.
So
Molly, what is this chart you have up here?
Oh, so this is getting back to more residential issues. This is the difference between to make sure everybody files their exemptions. So what we have here is a property that has, you know, for round numbers, I'll change this. We'll just put it to 30,000.
Magic. See, Wes, spreadsheets are magic.
So what we see here is somebody who doesn't file their exemptions versus somebody who does file their exemptions. And in column C, I'm using somebody who not only has a homeowner's exemption, but a senior exemption, okay? And so this person would save almost $1,200 by making sure that they have their homeowner's exemption.
Mm-hmm.
And again, they wouldn't have that money. They'd be paying that money to Fritz Kagi if they didn't file for their homeowner's exemption. The good news is Cook County finally figured out that people don't get younger. And so once you get your senior exemption, you don't have to refile for it every single year like you used to.
Yeah.
And it, obviously, as well as your homeowner's exemption, you don't have to refile your homeowner's exemption. I will share a website with you guys. If anybody just wants to know it right off the bat, it's Google search for the Cook County Property Tax Portal. That is a great resource to see what your assessed value history has been, what your tax rate history has been, but most importantly, to see what homeowners exemptions and seniors exemptions you received. And if you didn't receive them, should indicate that you should go file a certificate of error with the Cook County Assessor's office to get a refund for your exemptions that you should have had. At this point, as of the details that were put on the assessor's website today, you can go back to 2017 if you own the property and did not get the homeowner's exemptions.
Molly, do you want to just put that link in the chat and I'll post it up on Facebook after we're done?
Sure.
But yeah, now, so the exemption is actually based on the assessed value, right? So they're getting so in this your example here, they're getting a $17,000 exemption off the assessed value.
It's actually the equalized assessed value, because can't make things easy, right? So if you see here, the equalized value is actually
96. Yeah.
10 times 3.2234 is the equalized assessed value, which is actually shown on your tax bill too when they.
Okay, gotcha.
And then your tax rate is applied down here after that.
Gotcha. Okay.
So.
Now, I had a colleague say something about did you talk about this? Because I sort of blipped out for a minute to make sure that we didn't have questions on Facebook, but something about a September 17th deadline or something like that, I think was,
yes.
What is that deadline that she was, is that something made up? I don't know.
Back to you guys. Somehow I lost you and can't see.
Because it's too late to protest your assessed value anymore, isn't it, for 2020?
The new the new assessed values are out right now for
2021. 2021, right?
Correct. So anything that you have on your tax bill right now, that's over and done with. You've got to pay it. Unless you have, like we just went through, if you're missing a homeowner's exemption, you can get the certificate of error. But other than that, you are kind of stuck with what you got. Sorry, it's just.
But you, so they're, oh, great. Okay, thank you. Yeah.
And so I'm going to reshare again because I also predicted this question and go share. So as of now, these are the townships that have the Cook County Assessor has released the 2021 revaluations, the new assessments for these townships. So Rogers Park, West Chicago, and Jefferson have all been released. And obviously Rogers Park and West have already passed for their appeal deadline at the assessor's office. September 17th is the deadline to appeal at the assessor's office for Jefferson Township. Again, there's always a second bite at the apple at the Board of Review. So if you do live in Rogers Park or West Chicago Township, don't fret, you can still file an appeal at the Cook County Board of Review. Great. North, South, Lakeview, Hyde Park, and the other ones have not been released as far as the website said. Check something.
Well, Molly, this has been really great. I feel like we could go on for another hour, but probably should not.
And I'm sorry, I know I jumped all over.
No.
No, it's great. Well, you were answering our questions, so
yeah.
Our bad probably, but I think
anything you want to wrap up with?
I'm sorry, what?
Just as the only thing I can think of is as I'm looking at your thing here, I see the Rogers Park. One of the reasons this came up was in a meeting, people were talking about the jump at Rogers Park. I'm assuming that part of the reason it's been shocking for people is because we had an 11% reduction last year, and now they're not only catching up, but with the increases, it's making it seem that even that much higher. But
yeah. And that's one of the problems that we've seen in our appeals thus far this year for residential properties. The uniformity test is not really helping us out because, in our opinion, the assessor has really jacked up everybody across the board, and they're using sale prices to jack everybody up. Now, here's the problem, as you guys know as realtors, when you're out there selling your property, you're going to put money into it before you sell your property. So you're going to get a higher market value on it. Well, that doesn't necessarily reflect the market value of somebody who's been in their
Everybody
house.
else on the block, right?
So what we've had to do is really go out and get appraisals for our client's property. We do a cost benefit analysis. The appraisers come back to us with an estimated value for that property. We do a cost benefit analysis depending on how much the appraiser is going to charge for that and what, where we think the assessor might come in. Is it, worth it
Is it
to the
worth
client?
it? Yeah.
Yeah. Is it worth it to the client to do it? And based on that cost benefit analysis, we decide to move forward or not. And really the appraisal is the best estimate of the market value for that individual property versus looking at just the sale prices of an entire segment of the market, that could cross several boundaries and not identify stuff like personal property. Maybe it's in a better school district than the one that you're in, all those little things that change market values.
Hmm.
Cool. Molly, if somebody wants to reach out to you, how do they get a hold of you?
You can contact us at siegeltax.com, SIEGEL tax.com, or you can email me at mphelan@siegeltax.com.
Great. Well, Molly, thanks again. It was really great. I'd love to talk to you more about it sometime soon.
Yeah, that was really great. Thank you so much for taking the time, Molly. And I don't know, our sales manager might be in touch with you. He might have you come do a presentation for our sales staff.
Anybody who needs help, happy to talk to them.
All right, thanks so much. Have a good day.
Thank you.
Bye-bye.